You are about to find out all the key levels for the key earnings being released today. So we're going to go through PayPal, Shopify, Qualcomm, Unity, and Robinhood. So to get straight into it, PayPal is the first one we're looking at. What you can see right now is we're at $24.22. We're just above its first deviation from the 6 month. So right now we are slightly overbought, but not enough to really cause a massive pullback on the earnings. So the main thing I'm paying attention to on earnings is if we sell off, what we have as a support is 66.60. Now this is fair value. This is where we would kind of expect PayPal to potentially sell off to. On the other hand, if earnings come out quite strong and we actually move up off this release, then we have 79.30, 83.60, and 85.50 as all key resistances. So I think with PayPal, it'll be a nicer trading opportunity if we push to the upside. If we sell off, probably not going to be something I trade because we're going to be at that fair value. And as me being a reversal trader, obviously there's not going to be much opportunity if we sell off. So I'm looking for a move to the upside. And they're the levels I'm paying attention to. Obviously, if we sell off, then depending on your trading style, there may be opportunity, but fair value is at $66.60. So it's probably where we will see the move to if we sell off. Now, on to Shopify. What you can see is we're down actually just under 5% on the day. Now, what we're hugging right now is this anchored VWAP. What is this anchored VWAP? This is from June 1st, so it's a quarterly VWAP. We're holding this quite nice, but earnings do drop obviously today, and if we do sell off, I'm paying attention to 55.90, 51.35 as key supports. I really like the look of this 51.35 because it lines up perfectly with this anchored VWAP, and this is a anchored VWAP from January 1st, so it's going to be quite a strong level if we sell off. And if we did break that, which I do think would be quite unlikely, but if we did for any reason, we do have a gap fill location to be paying attention to at $46.27. So those are the downside targets. If we end up pushing up off this release, we have two key resistances to be paying attention to. They would require us to break above that 71.43, and this would be a $75.70 and $77.15 as those key resistance levels. So Shopify doesn't really matter which way we go. There's trading opportunities because right now we are basically fair value. This anchored VWAP, not only is it an anchored VWAP from June 1st, but it's also basically the stock at its fair value if you look at the statistical mean. So really there's opportunity no matter which way we go and shop. And again, 55.90 as that first resistance support, and $75.70 as that first resistance. So if we don't make a move to either of those, I'm probably not going to trade it just because there's not going to be enough opportunity on the table. So on to Qualcomm, ticker QCOM. Basically, if we sell off, we are a bit overbought as of right now. So we do have a support at 125. But if we break that, then we are basically at fair value, which would be 118. So that's what I would see us doing if we push to the downside. However, if we push up, and again, it's going to be a bit harder to push up on this release. They're really going to have to be expectations because we are in more overbought territories. So if they come out in line, we will probably still sell off this release. But as resistances, we have 132.27, we have 135.25, and the final two resistances, which are really going to be those key targets if we can push up, which I think if we do get good earnings and we push to the upside, these two levels are going to be the most likely that we hit. That's going to be $140.35, and my favorite level will be the 145.50. And again, these are our third deviations. What this means is it's a 99.7% probability that, or 99.7% of data should trade below that level. Again, in the stock market, nothing's actually that accurate, but through standard deviations, that is what it expects. So it's just a really high probability. If we break above 140.35, we do expect a pullback, and that's how I will be looking to trade it. Now on to Unity. This stock has been flying a lot recently since they really had their last earnings. Since then, we had a bit of a pullback, and then this stock has really flown and really held up at these highs. So what are the key levels? So right now we are slightly overbought, not extremely though. Even though we've had a run up into earnings, the deviations have had time to adjust, meaning we're not actually extremely overbought anymore. So if we sell off this release, we do have a $40.30 support. And if we break that, we have then fair value statistical mean at $37.50. Obviously, do note you do have a level at 43.35, but that's basically the level we're holding today, so probably not going to be significant coming into earnings. Now, if we start pushing to the upside, we have 47.30, 49.20 as some key resistances. And if we went even further, we have the third deviations, which again are always going to be the best levels to trade, because if you understand, like we said before on Qualcomm, if you understand standard deviations, 99.7% of data should trade within those third deviations, meaning if you break above it, you expect us to start falling back below it relatively quickly. And again, that's at 54.30 and $55. Now, on to the last stock we're going to analyze for the day, and that is Robinhood Markets, ticker HOOD. Now, we are quite overbought on Robinhood, so unless their earnings come out quite strong, again on this, we would expect the stock to sell off, and that's because fair value is at $10.70. Right now, we're sitting at $12.40, which is slightly above its second deviation on the 1 year. So again, we're slightly overbought, meaning the earnings need to be strong to continue up. If we sell off there, we do have that 12.20 support, 11.90. Now, we would probably see a reaction stronger than that, so I don't know how all significant those levels will be on the actual release. So what I'd be watching more for is if we sell off the 11.22, which is the gap fill from a few weeks back, and then you also have the $11 anchored rewrap from the June 1st. Now, if we start pushing to the upside, we then have $13 and $13.30. Both of these have basically already been hit on that previous move, so they will be significant, but I probably will not be looking to trade these in the pre-market or after hours today. So I'd be waiting to trade those levels into the open. However, if after hours we can push all the way to 14.20, this is probably something I will look to trade after hours, because this level is very significant. If we break up to this kind of high, we would really expect a quick pullback back below that level, and that's why I'd be jumping in a bit early, getting in after hours. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.